Are you crowding between extensive stocks? How about you consider investing in a high-end penny stock? Sounds ironic. Well, stay with us to know more. As an investor, you are constantly looking for undervalued stocks, or in other words, stocks that trade at a price below their intrinsic value. But is it possible to determine whether the stock market as a whole is overvalued? Sure, this is definitely possible, and there are several ways to approach this. Welcome to PennyStock Lifestyle, the channel where you get stock inspiration, motivation, and knowledge to become the next future billionaire. Hello, future billionaires, and welcome back to a brand new video. Today we'll be looking at one such undervalued stock called GTEC Holdings, with a ticker symbol of GGTTF, which trades on over-the-counter markets, along with the Canadian venture exchanges under the ticker symbol GTEC. This penny stock is worth a watch. As per January 2021, the stock was trading at 10 cents, and within a period of 4 months' time, the stock is currently trending at $0.71, with a weekly increase of 330.85%. This stock has been going insane. It has reached a market cap of over $140 million, holding an enterprise value at $113.4 million, with a price-to-sales ratio at 1.45. The stock has an average volume at 3 months' time over 1.22 million, generating revenue over $200,000, with a profitability margin at 10.11%. The quarterly revenue growth of this stock is seen over 20%, yielding a gross profit over $250,000. GTEC Holdings are a cannabis company located in Kelowna, BC, the Napa Valley of the West Coast, Canada. They are dedicated to cultivating ultra-premium cannabis in the purpose to build indoor facilities and bringing sought-after brands to market. They are focused on the high-end grass market. Usually, these types of companies are primarily focused on its production instead of the quality of the product. However, this company, on the other hand, is focused on its production as well as its quality. Currently, this company has 3 different types of products: Black Market, Tenzo, and GreenTech. The Black Market focuses on high grass concentration for experienced consumers. Following that, the company has the Tenzo brand, which consists of the balanced cannabis with diverse terpene-rich strains. Post this, they have GreenTech brand, which is a medical cannabis to help assist with pain relief. With these products, the company is targeting both the recreational market as well as the medical and B2B channels. Being a vertically integrated grass company, meaning they work all by themselves, including the production facilities in British Columbia, Alberta, and Ontario. And they're also licensed for sales into recreational supply chains and direct sales to medical patients. This is inclusive of bulk sales to other licensed producers, extraction, and for analytical testing. The company is different from other grass companies as it targets the high-end consumers explicitly, having its primary focus on the product's quality, cultivation, marketing, packaging, and distribution. Norton Singhaven is the founder, chairman, and CEO of GTEC. He's been an expert in capital management. Other than him, this company has some brilliant management teams. On its stock news, the CEO, Norton Singhaven, has been a consistent buyer of the stock since its inception in the trading market. He has purchased about 1 million shares. Furthermore, his family has been heavily investing on this stock. This company has repaid all their unsecured convertible promissory note with Invictus MD Strategies Corporations in full. Along with that, they also repaid a $6 million loan. So now they're completely debt-free. However, after this positive news, the stock price decreased at a rate of 1.56%, indicating how volatile this stock is. The company has been posting a very solid revenue number. As of April, the company had a significant revenue growth of 267%, resulting the same for a record revenue of $8.8 million. It has its production increased by 269%. The substantial reduction of the operating expenses is being brought down by 40%, almost by $2.7 million, yielding a net income from operations of $282,000, which is positive compared to a net loss of $8.3 million in the previous years. So, we can see that they have started to make a profit from making losses in millions. They are now making actual profits. When a company pays all its debt back, they do not have any further payments acquiring their interest, meaning they won't be stuck anymore at payment every month. So the repayment of loans has further reduced their expenses, allowing them to get to a level where they can gain profits. GTEC on April 9th had paid back its 2 senior secured promissory notes with NFS Leasing Canada, carrying an aggregate principal balance of approximately $6 million. The company's debt will be delivered over $1 million in interest savings over the next 12 months. Now, since the company does not have to pay $1 million as interest every year, adding the amount to their net income, speculating it to be the same, the company will be seen to get an increased net income from $282,000 to $1.3 million. So that is massive news for this company, being a huge cash saver, as the company will now be saving $1 million. Considering the company is a small market cap one, it is growing super fast. However, comparing its $1 million savings to maybe Apple, in actual terms it wouldn't matter for Apple, for it's a market cap of over $1 trillion. For GTEC, which is an over-the-counter penny stock, saving that much money and growing at this pace is a very bullish signal for the stock. Most of the penny stocks have a lot of convertible loans, always on the balance sheet. Along with that, they have dilution issues. They dilute the shareholders' power by issuing more shares. And at times, convertible loans convert into common shares, creating a huge bubble of confusion. However, GTEC Holdings, when compared to the other penny stocks, is doing great. At this point, it is absolutely debt-free and is showing a beautiful uptrend market. We do speculate that over the long run, provided the company keeps on posting such solid numbers, motivating its investors, this company is expected to have a very bullish market ahead. The company currently has a strong working capital position and balance sheet with cash in hand balance of approximately $19 million, as they become one of the few debt-free companies within this sector, continuing on their mission to become a leading producer of high-quality cannabis products in North America and the global market. GTEC Holding has released their financial data for the first quarter of 2021, ending on 28th February 2021 and starting in December 2020. Now, this is huge news for the company that will enable us to predict more about it. Looking at it, we have their gross revenue at $2.2 million, with a decrease of $313,000 by 12% from the previous quarter, which was at $2.5 million, from the sale of 342 kilograms of cannabis. The company signed an agreement to furnish 500 to 1,000 kilograms of product a year to the Israelis. Among a number of facilities of GTEC, this is one of them, dedicated to for the same. The company had to hold product from its first quarter for being able to export the demanded kilograms, then became a primary reason for the revenue downfall. Since the company was selling off so good that they had to hold inventories for meeting up with their obligation to the Israelis. Apart from that, the gross dollar margins of the company is at $811 million compared to $686,000, showing an increase by 18%, or $125,000 from the last year quarter. Its black market sales, or the recreational sales, have accounted for over 82% of the total sales. The company has increased its overall weighted average by 4%. They also took a course of an advertising technique by decreasing the recreational weighted average selling price by 9% to $7.48 per gram to be more competitive. However, due to non-cash fair value changes, their net income from operations of $368,000 this quarter, showing a decrease of $908,000 at $1.27 million from the last quarter, falling by 71%. GTEC, while the ongoing of the second quarter, has already exceeded their Q1 revenue. Selling off your shares now will land you regretting. Furthermore, GTEC has recently closed deals for proceeds over $20 million. Overall, this company is growing very fast. We are expecting to see a net profit margin being 15 to 20% or maybe higher, considering their total average selling price going up, makes our opinion very bullish about this company, as it is soon going to surpass the $1 mark pretty. If you'd like to stay up to date with the best and latest content about stocks and entrepreneurship, then make sure to subscribe to our channel and leave a like on this video. Did you find this video valuable, or do you want to add anything? Make sure to let us know in the comment section down below. We are posting a new video every day with the most undervalued penny stocks in the market right now.